Hey guys, welcome to the first part in my financial series, How to Read Financial Statements series, how to read a profit and loss statement or how to read an income statement. This will be a really quick overview. I have a bachelor's degree in finance and I've been a small business owner off and on about 10 years. And in this video you will learn the three main parts and all the little parts in between about how to read a income statement or profit and loss statement. Let's get started. All right, at the top of the screen you'll see condensed consolidated statement of operations. This is Apple's actual profit and loss statement that they released a few months ago. You'll see below that it says shares in thousands, $ in millions. That means any share count you multiply by 1,000 and any dollar amount you multiply by millions. Big numbers. On the right side at the top of it you see it's a 3-month quarterly report and not the 12-month annual report. And then you have below that the dates of this report and then the date of the prior report for comparison. All right, let's go ahead. The first line you see is net sales. That is the total amount of sales from goods sold. Since this is Apple, it'll be the iPhones, iWatches, iPads, and all that stuff that they've sold. You'll see it says 84,310. Since it's done in millions, that's actually $84,310,000,000 in net sales. The next line you'll see cost of sales. Cost of sales is the cost that were incurred to actually make the products. So it's the labor, the materials, parts and pieces, shipping, things like that that actually go into getting the product out to the stores and to the customers. The next line is gross margin. The gross margin is simply the net sales minus the cost of sales. And that is the money that's left over after the cost of the goods for the business to spend or return to investors or just hold on to, as Apple likes to do. That little section I like to call the revenue section, and then we'll move on to the expense section. Research and development, you can see that it's $3,902,000,000 worth of research and development in the last quarter. That's actually what they're working on. So when they release the Apple TV and I forget what they're calling it, the expanded payment system and the credit card and whatever else that they were working on, plus things that they haven't released yet, that's all included in that. The next line you'll see selling, general, and administrative. What that is, that's like your secretaries, commissions to salesmen, things like that, paper clips, keyboards, printer paper, the simple day-to-day use things that a company will use just randomly and it costs the company money. One of the things that you want to note is the selling, general, administrative expenses relative to the gross margin. Many companies, if they're not profitable, it's because they're not disciplined with their selling or their SG&A expenses, and that will cause a company to be unprofitable if they spend too much money and they're inefficient in this line. Total operating expenses is just the total of the research and development and the SG&A, the selling, general, administrative. That's generally called SG&A. So if you're watching CNBC or whatever and you see somebody talking about SG&A, that's what they're talking about. Operating income, pretty simple. It's the gross margin minus the total operating expenses. Other income and expenses, think money you lost or found in your couch. $560 million that Apple lost or found in its couch comes from other things. It's not sales of products. I assume it's probably the money that they get from Google for having that as their primary search engine. Income before provision for taxes is the operating income plus the other income or expenses line. The provision for income taxes, this is a non-cash expense. This is how much the company expects to pay in taxes for the money they've earned in this quarter. Net income is the income before the tax provision minus the tax provision. Simple enough. We'll skip over the per share data and move to the earnings per, or the total share count. The basic share count is the total amount of shares outstanding that people are trading or holding as an investment on any given day or on the last day of this month that they're reported. You'll notice that the share counts from last year to this year have declined significantly. That's because Apple has a large buyback and they are actually reducing the share count. The fully diluted shares is the total number of shares that exist. The company buys back shares, maybe they haven't retired some, or maybe there's some that are held in some kind of an account somewhere for use for stock-based compensation or something along those lines. That includes every share that exists. And I wanted to go over the per share data so that it would make sense when we get to the earnings per share, which we'll go to now. The basic earnings per share is figured off of the basic shares. So that's the net income in millions divided by the shares in thousands. So it's $19 billion divided by 4 billion shares, which is why you come up to $4.22. And I wanted to talk about the buyback a little bit in advance so that you would notice that even though the net income went down, the earnings per share went up. That's the value of share buybacks that people don't understand when they're talking in Congress about how share buybacks are bad. They're actually giving money back to the investors and increasing the value of the company for your 401k and things like that. The diluted EPS is exactly the same as the basic EPS, except they use the diluted share count, which is why it's always a smaller equal to or a smaller number than the basic count. The bottom two sections of this one are really not important. The products and services, net sales and cost of sales. That's just Apple trying to show off how their services is growing. You won't see this on most income statements. I hope you liked this video, and if you did, you can get more information at momentumtrading.blog, and if you enjoyed it, please like and subscribe, and I will see you next time with how to read a balance sheet.